have really changed our generation since the late 70s, early 80s. There's actually three components. One is we've become a nation of speculators. And we can talk about the other two if you wish, but that's really, I guess, the fundamental flaw in traditional financial plans is that we've taken on all the risk and handed away all the guarantees. Most investment plans keep your money locked up, cannot access that money without getting slapped with penalties and fees. So again, the 401k, the IRAs or RSPs.
And that's next on Bootstrapping Your Dreams Show. So, the big question is this. How are ambitious people like us, who don't have a lot of resources, did not go to Ivy League colleges, were not born into wealth, how do we become resourceful enough, use our creativity, our dedication, and a little bit of crazy to bootstrap our way to realizing our dreams? Whether it is launching a new company, launching a new app, or making it to the top of the corporate ladder. That is the question. And this podcast will give you the answers. Hey listeners and viewers, we have created a tremendous community of bootstrappers, entrepreneurs, and professionals who are ambitious, resourceful, and want to get things done. We brainstorm, support, and help each other out. Come join us. Navigate to bootstrapping.group. That is bootstrapping.group. If you like this video, do not forget to hit that like button now. Or if you want us to improve our content, go ahead and hit the thumbs down button and give us your feedback in the comment section below. Here at Tetranoodle, we are passionate about entrepreneurship, technology, and innovation. Every week, we bring you insightful and engaging interviews, tips, tricks, and strategies to help you grow your business or rise in your corporate profession. So if you're new here, please consider subscribing. And do not forget to hit that bell icon so that you are notified when we publish new content. Hello and welcome to our new episode of Bootstrapping Your Dreams Show. I'm your host Manuj Aggarwal, and today we'll be talking with Mark Willis. So Mark is a man on a mission to help people think differently about banks, Wall Street's abuses, and financial uncertainty. After graduating with 6 figures of student loan debt and discovering a way to turn his debt into real wealth, as he watched everybody else lose their retirement savings and home equity in 2008, he knew that he needed to find a sane way to meet his financial objectives and those of his clients. Welcome, Mark. We are so excited to learn all about financial literacy and how you can turn debt into wealth.
Thanks for having me, Manuj. I appreciate it.
Awesome. So just so that we can get to know you better, can you tell us a little bit about your background, your experience, and how you got started in this industry?
Sure. Yeah. My name's Mark Willis. I'm a certified financial planner. We work with clients from the start to the very finish, including their estate plan and beyond. So as far as like how we're going to pay for the bills this month to 4 generations into the future, it's really a remarkable career to be in, and it's been a privilege and an honor to work with hundreds of clients all across the United States. And we specialize in some strategies that I have found to be life transforming, but usually not available or known about by typical investors who are looking to simply just grab the next latest tech stock or get a little bit higher rate of return in their 401k. I feel like that at the end of the day is table scraps off of Wall Street's table. We should be going for something much bigger and better for our own financial future.
Yeah, for sure. Now, let me start by financial literacy, because, I had very similar experience in 2008 where I did not know anything about how to save money, how to, manage the money that I have saved. So I handed it over to some good people who were, pretending to manage it, and it didn't really work out. Anyway, long story short, I lost a lot of money in 2008, and then I started educating myself out of necessity. So a lot of people I talk to, they are not very familiar with, how to manage their finance. What is stock market? Most of the people are scared of it and they have no idea. So let's start there. How do you find the education level of people in terms of their financial literacy, how to manage their money and all that?
Well, I'd say the 4 most dangerous words in your financial life are the words do it for me.
Mm-hmm.
If you hand it over to an investment advisor, he or she will end up making off quite well for themselves. And you don't want your investment advisor to retire before you do off your money. And that's unfortunately what happens with most traditional financial plans, isn't it?
Mm-hmm.
I mean, think about it for a moment. Who takes on all the guarantees in your investment portfolio? Well, they're guaranteed to make a fee off of your investment portfolio, whether you win or lose on the Wall Street investments this year, right? Who is accepting all the guarantees? Well, they are. Who's accepting all the risk? Well, it's on our shoulders now, right? Since, at least in the United States, as of the late 70s, early 80s, we moved away from a pension-based system, and now we're built more around a 401k or an RSP in Canada. And so the problem with having a risk-based portfolio is, yes, it feels great when the markets are up, but it feels terrible when the markets are down. You know, I feel like that's one of the three big components that have really changed our generation since the late 70s, early 80s. There's actually three components. One is we've become a nation of speculators. And we can talk about the other two if you wish, but that's really, I guess, the fundamental flaw in traditional financial plans is that we've taken on all the risk and handed away all the guarantees.
Yeah. I think, and as I said earlier, like, I think a lot has to do with the lack of education. So let's talk about now the mechanics of these strategies. You know, obviously, as you put it, a lot of big players, large investors, they have access to all these strategies, a lot of information, a lot of help. But the small investors, they unfortunately do not get the same attention. So is that a misconception? Is that like a conspiracy theory, or is that true from your perspective in the industry?
No, it's precisely correct. Think about the last time you bought some clothing. There's retail is one place you can go for buying your clothing, and that's where most of us buy our clothes. Well, what is it? It's mostly you're gonna pay retail price, right, for that nice new blazer or new dress or whatever. And usually retail price is as high as it gets because you're paying for so many layers of overrides and so forth for that nice dress or blazer to be hung in that nice store, in that nice mall, and with all the real estate expenses and paying the payroll of the people who sold it to you and commissions out the wazoo. Retail is typically the financial products that are made available to mere mortals like you and me. Things like mutual funds, things like 401ks and IRAs, things like 529 plans for your kids' college here in the United States. So, where has buying retail for our investments really gotten us? Well, we've had a full generation, almost 50 years for the 401k to have worked out. In 1981, we had the first 401k in this country, in the United States. So, how's it done, right? At this point, the 401k is so young, it's not even old enough to retire yet. And yet we've really made it a nationwide experiment on our retirement plans. Well, the average 55-year-old has a 401k balance that wouldn't even cover 1 year of their salary.
Wow.
Let that sink in for a minute. That's a tragedy on a national scale. And all of that money, by the way, is going to be taxed in the future. So to look at it from a purely empirical standpoint, we've all paid retail when we should have been looking for ways to buy our investments wholesale or direct. And there's other ways you can buy things and invest in your financial future without having to rely on Wall Street and pay retail price. I mean, where is it written that we have to pay retail price for things that help our financial plan come to fruition?
Yeah. All right. So are we talking about some alternative securities, alternative markets, or things which are generally not accessible to the general public, or is it accessible? It's just lack of knowledge.
Yeah, it's generally speaking, it's just a lack of knowledge. There's obviously, when I went through my CFP designation and training, they put you through the ringer and they get you looking at, everything from dynastic trust setups and very complex derivatives. They make you look at how hedge funds are run. They make you look at captive insurance options and private placements, private equity funds, all sorts of stuff that you have to be an accredited investor just to participate in. And as of this recording, that means you need to have a net worth of at least $1 million or more and have an income of at least 300 grand. Most people may or may not, listening to the show, may or may not count as an accredited investor. If you do, congratulations. And there are some new financial vehicles that are made available to you at that point. But most of the time, Manuj, it's just a lack of knowledge. I think someone smarter than me said, the people die for lack of vision. The people die for lack of vision. If we don't know what is available to us, we'll die on the vine, so to speak. So yeah, it's really just a matter of, have we ever stopped to think about where we put our money? And do we know what our options are? Whether we make, 300 grand and have a net worth of $1 million, or if we're just, bootstrapping our business to get things started, and starting our first paycheck or starting our first business, and maybe we don't have a bajillion dollars to invest, but do we know what's available and what options are out there?
That's great. So let's get into the mechanics now. Like, do you think you can share a little bit of, the types of strategies you recommend to your clients, or is that proprietary information?
No, of course. Happy to share. I obviously won't be able to give any financial advice on this podcast. Don't know everybody we're talking to. But there's some strategies that I feel like can help. If I may, Manuj, let me just sort of share a bit about how my mind works when I'm sitting down and talking one-on-one with a client.
Yeah.
Generally speaking, there's four major problems I see with traditional retirement plans, and then I'll talk a little bit about those, and then love to share a bit about how we start the conversations with clients, because it is a one-on-one blueprint design conversation that we have with clients.
Of course, yeah.
The main thing that I don't like, and this is coming as a certified financial planner, what I don't like about conventional retirement strategies is, number one, there's zero guarantee built into any financial plan. And can I really call it a plan if there's no guarantee? I mean, literally think about that for a minute. So there's really no way to know exactly what we're going to be worth when we go to tap into our retirement plans. One of the biggest things that I don't hear any investment advisor or financial planner talk about is something called sequence of returns risk. And just quickly, I won't bore your listeners with too many details here, but I can give you the exact same rate of return, and in one instance you might have double your money, and the other instance you might have less money, even though you have the exact same rate of return. It all has to do with the order in which you got those returns. So I could flip your returns upside down. Let's say you had 10 years of investments. If you started with positive years and then ended with negative years, you'd be doing great. But if you started with negative returns and then got positive, you'd be doing terrible. So I'll keep it simple on this podcast, but really ask any investment advisor if they even know what that word means. Sequence of returns risk. It's one of the biggest vipers in your portfolio, you might say. And we're just coming to the end of a 10-year bull market. As of this recording, we're still up and hitting record highs in the Dow Jones. How much longer might that happen? So that's the first problem, is no guarantees. Manuj, the second problem is there are fees that essentially are vaporizing and gobbling up the gains you can get in your investment portfolios. And I was just reading that according to the Department of Labor, if you get a 1% fee attached like a parasite to your portfolio, 1% fee for some investment advisor to manage that money, and let's say you did, say, 7% a year, over 30 years, 35 years, according to the Department of Labor, you're going to see your account value vaporized by 28%, almost a third of your money gone just to fees on just 1%. And most people have more than 1% fee.
For sure.
Second problem is fees. Third problem, in my humble opinion, is most investment plans keep your money locked up, cannot access that money without getting slapped with penalties and fees. So again, the 401k, the IRAs or RSPs in Canada, it's similar in that structure, that you would be penalized and taxed if you access that money before a certain age. And most people have to spend money before that point, right? In fact, I read an article recently that said that over a quarter of all 401ks have a loan against them.
Oh, wow.
Isn't that crazy? So that should tell us that we are lacking in accessible funds for the typical investor. We've got all of our money tied up in things we can't access or control, like our home or our 401k or retirement plan. So that's the third problem, is access to money. The fourth and final one, then I'll hush for a minute, is most of us are sitting on ticking tax time bombs that we cannot control or know what the outcomes are going to be. Most of these qualified retirement plans are taxed when we go to get the money.
Yeah.
Tax deferred is the word, and most people love that word. Tax deferred sounds pretty great until you realize that just means postpone.
Yeah.
Grab a dictionary, right? The word tax deferred just means we have to wait until later to pay our taxes. So the question for a lot of our clients is, Mr. Client, do you think taxes are going to be lower or higher in the future?
Yeah.
Just look at where our country is headed. Is it going to be lower taxes or higher taxes?
Yeah.
And most people tend to think taxes are going up.
I think, for certain classes, generally, it's going to go up, generally.
Mm-hmm. Yeah, no one knows the future. And that's kind of the problem, right? No one knows for sure. And why are we leaving that part of our financial life to chance or to bureaucrats that might have another opinion about who should spend your money in retirement? So those are the four big problems or landmines waiting for most people that they may or may not even realize. Happy to get into some strategies that might help avert some of those if you'd like. But those I had to get that out there because honestly, most listeners, most folks I come across have never stopped to think about the bear traps that are kind of baked right into how they're currently saving for their financial future.
Yeah, no, these are very, very important points. And as I said, as I lost my money and started to educate myself, these are the things that came up. And as you just put it, they are not very complicated things. They're very simple things. But I think the way the financial industry puts out their information, it actually sort of tends to hide these important factors.
That's
and
right.
Sort of, embellish the rest of the stuff which benefit the financial industry. So it'll be wonderful if you can get into any strategy or how we can actually get around these four problems. Whatever you can share, that'll be awesome.
Sure. Yeah, of course. So again, it starts with objective mindset. And I know you've had a number of other guests talk about some of this on your awesome show. So I'll leave it to them and their expertise to talk further about that. But one of the questions we like to start with in our conversations with clients is, what do you want your money to do for you? It's such an easy, simple question, but literally maybe 9 times out of 10, no one has really ever stopped to ask themselves that question. If I had a single dollar in my pocket that needed to do everything I needed money to do for me in my lifetime, what sort of characteristics or attributes would I want that $1 to have in my pocket? That could be a thought conversation or a thought exercise that your listeners have. If I just had a single dollar, what would I want my money to do for me? Would I want that money to be lost according to, a market risk? Would I want there to be any sort of guarantees that my money would grow for me? Would I want my money to be penalized if I needed to access it before a certain age? Would I want accessibility to that dollar, or would I want it locked up and not available to me without being slapped with penalties and taxes? Would I want that money to be protected from lawsuits? And would I want to be able to use that dollar for leverage to get more dollars? I'm going to probably need more than $1 over my lifetime, right? Those sorts of things. Asking yourself, what do you believe about taxes? Doesn't matter what I believe or even what any podcast host believes, but what do you think about where taxes are headed? And those sort of questions are really what gets the conversation juices flowing. And we just have a tremendous conversation. Most often it can go on for half an hour, 45 minutes, just around that one question. Because again, most people have never really thought about it. And unfortunately, most people have their money aligned into various financial vehicles that disagree with their belief structure. And that causes stress. When you do things against your beliefs, that causes stress, if I can put it so bluntly like that. So are there places you can put your money that align with your beliefs? So that's the first place we start.
Exactly. And to your point, a lot of people don't even know where their money is sitting and what kind of characteristics these investments have, and let alone, to analyze whether it is in line with their own beliefs or not. They don't even know how to look at their statements and whatnot. And this is from my own experience, because I had no clue.
Mm-hmm. Well, likewise. I mean, I'll tell you, I was looking for these answers to my own financial plan. And when before I go on any further, I'll just tell you a bit about my experience. I was really brought up to kind of think in the classical mindset of traditional ways of investing for retirement and so forth. And, it's interesting. I really tore apart the slides that I was learning in my certified financial planner designations, all the books and textbooks. I wanted to know something better than what I saw happening to the clients of the CPA that I worked for at the time of the Great Recession, when she would make these phone calls, Manuj, and say basically, "Hey, I'm sorry, Mr. Client, but I just lost you half of your life savings."
Yeah.
The 401ks were becoming 201ks at that point.
Yeah. Yeah.
So, I looked into it because I had a mountain of student loan debt at the time. My wife and I didn't really have like a full-time. We had a job, but it was like not exactly secure because we had just graduated grad school and entered into the workforce at the beginning of the Great Recession. So, we were first on the chopping block. If anyone was to be fired, it was going to be, or let go, it was going to be the last people hired, So we knew that we were on thin ice, and we had no plan to pay off all of the student loan debt. And no real plan for our own retirement. So this is what kind of got me really focused on finance and got me thinking about, well, what are some, and really obsessed with finding alternatives to the Wall Street game, because I just did not see the Wall Street solution being our white knight in shining armor, because I was watching these 61, 62-year-olds lose half of their life savings to the market's volatility.
Yeah.
So anyway, I did a lot of studying: complex dynastic trusts, stock options, bond portfolios, mutual funds. I remember raw land was a big one. Lots of crazy tax strategies. What I did find at the end of all of my studies over almost 2 years was this wild, old-fashioned form of high cash value, dividend-paying whole life insurance that met my own financial needs. And I can talk a bit about how that fits into the investment space, how it even helped me pay off all my debts. But of all things, it was a real surprise and a shock to me.
Mm-hmm. Yeah, sure. Please go ahead and share that knowledge. I think it'll be very valuable.
Okay. Yeah. I mean, so right off the top, I was pretty well convinced that life insurance had nothing to do with my retirement plans. I mean, this was, again, I was mostly interested in buying term and investing the rest. When I stumbled across this type of whole life insurance, it really shocked me. It was almost categorically different from what Dave Ramsey, Susie Orman are talking about. Usually whole life insurance has zero cash value and is really focused on the expensive death benefit. But this type of whole life is a kind that, I don't know what to say. It's sort of like has a equity or a living benefit, stuff you can use and spend early on, like in the first month, in the first few months. You even have access to money. And for us, it was a way for us to grow our money. And so I'll give you 4 quick characteristics of what I found with this, because it was something I did not see or know about when I went through my CFP. So the first thing is that it grows on a guaranteed basis outside of the stock market, and you have a higher cash value every single year for the rest of your life, guaranteed.
Wow.
And this is true in the US and in Canada, both available. The second is that the gains are locked in, so you can continue to make a real plan that, hey, you know what? On a guaranteed basis, here's exactly what I'm going to be worth next year, the next year, 20 years from now, 50 years from now, as long as you wish. It literally prints out a schedule of your net worth in these policies each year.
Nice.
The second thing is that there are some specific tax advantages where it can be, grows on a tax-deferred basis, but like a Roth IRA here in the United States, you can get access to the money in that policy completely tax-free if you pull the money out through withdrawals and loans. Yeah. So it's a fully tax-efficient vehicle, and you can access that money in retirement. So I actually showed some numbers to a young couple the other day. They're going to pull about $200,000 out of their life insurance every year in their retirement years and report $0 on their tax return. I mean, that's tremendous.
Yeah.
So it's a tax favored vehicle, but it's also not locking the money up. You can access that money in retirement, sure, but you can also get the money out next Tuesday if you needed to. You can access that money before retirement without getting early withdrawal penalties or anything like that.
Awesome. So you talked a little bit about tax-deferred accounts and how that works, and I again, you explained it a little bit, but I think it's important to touch upon that again so that people understand that when they put money in 401k or RSP, that's tax-deferred. And so, what happens when they actually retire and they have access to the money? Can you tell us, what the mechanics have and what are the implications of that? Of that account?
Sure. Well, yeah, and we can go into further detail if you want, but every tax deferred vehicle, whether RSP or 401k or IRA, has built into it a future tax rate. They just haven't decided how much of that's going to be yet.
Yeah.
So imagine with me for a minute that you needed a bank loan. And you walked into the bank and they were willing to give you a loan today, and they told you that they'd just tell you what your interest rate on that loan was going to be when you paid them back. Yeah. Would you take that loan?
No way.
That's exactly how it works with tax-deferred plans. They haven't gotten around to voting on how much of that 401k belongs to them yet. Okay, so imagine that for a minute. And now imagine that there are $22 trillion wrapped up in 401ks, IRAs, and similar tax-deferred plans. In this country. So that's a big ticking tax time bomb. Now, why did they do that? Well, think of it this way. The government is looking for ways to raise revenue, and so this is a tremendous game where they're essentially going to get the bulk of or at least a good chunk of your hard-earned savings in retirement. I'll give you two quick examples. If you've got $1 million in your portfolio, on your 401k, you feel like a millionaire. But in truth, maybe 20 to 40% of that belongs to the IRS. 200 to 400 grand would go to the tax authority. Yeah. Right? Now let me do one more thing. What if you pass away before you spend that money and you leave it to your adult children? So I've got $1 million in my 401k, and I have 2 children, let's say. Okay, and I pass away. And I don't leave it to my spouse. Maybe my spouse has already passed or something. I leave it to my 2 children. Now they're going to get 500 grand each, but they have to pay taxes on that. Yeah. What is 40% off of 500 grand? Let's see. I'll do the math right now. So they're going to end up with 300 grand each child. Okay, so 300 grand for one child, 300 grand for the other child after tax. The IRS or the tax authority would get 200 grand plus 200 grand, which is $400,000. Yeah. So wait a minute, let's do the math there. Who was the biggest beneficiary on your $1 million account?
Yeah, the IRS.
The IRS, yeah. Is there someone at the IRS you're especially fond of that you'd want to do that? So I would rather leave more of my money to my children, which is why, again, the life insurance has an interesting component. It automatically multiplies my legacy that I'll leave my kids or my spouse. I literally cannot save as much in a savings account as I could leave to my kids in a life insurance policy, and that's all left to them income tax free.
Yeah, I see. That's great.
Is a reason why the wealthy have used life insurance for over 200 years to do exactly what we're talking about here, to keep money in the family.
Yeah, that's amazing. Now, you also have said that United States has sort of become a nation of debtors. So can you align that thought with what we just talked about?
Sure. Yeah. And again, I'll also kind of mention one of the key components of how the life insurance might even help you become your own banker. And fire your banker. If this nation is a nation of debtors, I'll quickly mention some statistics. According to the U.S. Department of Commerce Bureau, on average, we're spending about 38 cents on the dollar to service our debt, all of our interest payments, our mortgage, auto loans, credit cards. I know that's crazy, right? What's a third of our day? If we're trying to start a brand new business and we're bootstrapping, but we're sending 38 cents on our dollar to a bank down the street, then literally, Manuj, that means that a third of our day, we're not actually in business for ourselves. We're in business to the bank.
Sure. Sure.
right? We're slaves to the bank at that point for a third of our day if time is money. In 1940, by the way, a good chunk of years ago, we were only paying 11 cents on the dollar for debt. So what if you could become your own banker, fire your banker, and recapture that 38 cents and pay it to yourself rather than to Bank of America, Chase, student loan companies, auto loan companies, whomever. You'd literally beat the competition in whatever business you're setting up and starting, because all the other average debtors out there are playing the old game, right? They're still in debt up to their eyeballs. If you simply could pay yourself that 38 cents, you'd win every time.
Yeah, for sure.
The way we like to use this concept of being your own banker and the mindset of banking and bringing it in-house, you can set up fairly simply inside or outside of your business. You can set up an entity that effectively works like a bank. These life insurance policies are a contract with the insurance company that allows you, guaranteed, the ability to access the money in that policy as a loan to yourself. And so for my wife and I, we used our policies, for example, to build up wealth inside the policy, take a loan against the policy, and wipe out our student loans one at a time. That's how we got debt-free. And what's kind of neat about that, Manuj, is because the policy was designed correctly. Now, not all life insurance is created equal, so I'll be very clear to say that today. But if it's designed correctly with an advisor that knows what he or she is doing, the policy will continue to grow even on that money I borrowed to pay off my student loan.
Great.
So if I had a $70,000 student loan, which we did at that point, you can borrow against the policy, pay off the student loan, and the policy is still earning interest and dividends even on the capital you borrowed. That's better than debt-free in my book.
Yeah. No, but what about the money that you borrowed against the policy? Isn't that a new debt?
Yeah, it's a great question. So the policy does give us the chance to borrow against it. And the insurance company has self-collateralized that loan. That's a fancy word for saying it's not required to be repaid in your lifetime. If you simply, I would recommend you repay it. There's a chance you could see the policy lapse if you don't. But if, let's say that you had $1 million death benefit and you borrowed, $100,000 to invest in your, business or pay off a debt or buy a car, or that'd be a nice car, or anything. Okay, so we got $1 million death benefit and $100,000 cash value. Okay, so I took a loan against that cash value for $100,000. Well, 1 million minus 100 is $900,000. The death benefit would be reduced if you never paid that loan off and then passed away. Yeah, so there's no required repayment plan. You are your own banker. Now, I oftentimes will recommend folks repay that loan so that they can spend that money again in retirement, for example. But it's absolutely under your control, which is kind of the whole point. We want to have more things that are built on predictability, guarantees, and for the business owner especially, starting their business, having a predictable, guaranteed, under your control line of credit for your business gives us more options and allows us to become more competitive in the marketplace.
Awesome. And I also heard that these life insurance contracts, they can also be done in businesses, like in a corporation, not just for your personal life insurance. Is that true?
That's right. Yeah. If your listeners want to Google corporate-owned life insurance, COLI, you'll see all of what we're talking about here. But yeah, banks, by the way, are some of the biggest purchasers of these life insurance contracts. And so are corporations, mega corporations. You better believe that they've got a life insurance policy on, Tim Cook over there at Apple. These are people who are important to the business. That would be you if you're the business owner, even if it's a solopreneurship and you're just started. You can have a life insurance policy inside your business that works as an asset for your business. Imagine having a big pool of working capital, which is the cash value of this life insurance policy. And totally, your business can own, operate, use this pool of cash, and it's just insuring you or maybe another business partner. And it's done all the time. We work on strategies like golden parachutes and other things that help folks have an exit strategy for their business someday using the life insurance vehicle.
Oh, that's great. Well, this is so much, so valuable information, and I can't believe a lot of people don't have that, which is unfortunate. But thanks to you and people like yourself who are spreading this knowledge and educating people, and hopefully this will transform the financial system that we have today someday, and it'll be better for the people.
Absolutely. Imagine just for a moment, Manuj, if just 10% of the population fired their banker. Like
Yeah,
how would we survive as a country if even just 10% of Americans and Canadians had their own banking system set up for their
yeah,
families?
yeah,
And how many credit card businesses would go out of business? How many
yeah,
payday loans would have to shut their doors?
yeah,
The mortgage industry would be transformed. I mean, it's
yeah.
so we could be on the
Exactly.
precipice of a revolution if folks are able to think different about money and how the banking function in their life works. You're already in
For
the
sure.
banking business. You're just on
Yeah.
the wrong side of the banker's table.
For sure. And you know what? We have an international audience as well. And what I have found, because I lived in India for a while, and I've lived in some other countries as well, visited, traveled quite a bit. And I found that pretty much all these paradigms we talked about, they have some sort of a parallel in every country. They have tax deferred accounts, and they have life insurance policies, which cater to all these different issues. There may be some products which may not be available in some countries, but overall, it's a
Right.
pretty parallel system.
That's right. Exactly right. Thank you for pointing that out. And you're exactly right. In fact, there's a great book out there called Debt: The First 5,000 Years by David Graeber. And he goes all the way back to the beginning of human civilization and talks about how banking has always existed. But you're exactly right. The point is, if you've got an advisor who knows what he or she is doing, there's almost always a way to find one of these contracts in your particular situation of life. I'm working with someone in Switzerland right now who has some loose ties to United States, and we're able to do a policy for him. He has a business set up, an LLC set up here in Wyoming, in the state of Wyoming. So, there's all sorts of ways you can make it work if you know the advisor is on your side and knows how to design these things correctly. I would say there's a lot of people out there who hang their shingles out there as, being supposed experts in this, but I would recommend looking up a particular certification, and that is a Bank on Yourself authorized advisor. Bank on Yourself authorized advisors have I went through this myself. It was about 3+ years of training, mentoring, coaching for me to understand how to design these correctly, because you can mess this stuff up. I mean, if you can probably imagine, Manuj. So look for a Bank on Yourself authorized advisor. And I work with a number of them, so folks, happy to have them reach out to me and I can connect them if need be.
Yeah, that'll be great. Yeah, so please do let us know how people can reach out, your company website, address, and whatnot.
Sure. Yeah. The easiest, simplest is to go to freedomfromwallstreet.com, all spelled out, freedomfromwallstreet.com. And you can fill out your information. We'd be happy to reach out to you immediately within 24 hours. We'll let you know someone in your area or area of expertise will reach out to you. And I have a number of colleagues that work with me in this strategy. So happy to connect you with one of them or myself if you'd like to chat with me. If you just want to learn more about us and want to date us a little bit more first, I have a podcast that I know you got. If you like today's show, you'd totally check out our show. It's called Not Your Average Financial Podcast. That's Not Your Average Financial Podcast. Anywhere you're listening to this show, iTunes, whatever, you can find us there too.
Great. Well, thank you so much for doing this noble work, and continue to do that, and maybe come back on another show to tell us a little bit more about financial literacy.
Absolutely. It'd be my pleasure. Thanks, Manuj.
Thank you. And that's all for now. Until next time. And if you're an existing or an aspiring tech entrepreneur, then I invite you to check out my new online workshop, Bootstrapping Your Tech Startup Dreams. Go to bootstraptechstartup.com and sign up for free. I want to make sure that more successful and sound decisions are made every day in your tech projects. Let's start finding solutions to your problems. So go to bootstraptechstartup.com, and I look forward to helping you with your tech projects. If you want more engaging videos and insightful interviews with industry's thought leaders, then check out other videos we have picked for you. The link is right there. And if you want to be notified about our new content, please do consider subscribing to our channel.